Then think about it. The next halving, which is in 2028, I will argue that's another tenfold increase as we
Okay.
get
All right.
broader adoption and we go up the Metcalfe's law curve. That takes us to $1 million a coin. But
That is Mark Yusko from Morgan Creek Capital Management. They're an investment management firm. And he believes Bitcoin's going to $1 million by 2030. Mark actually called the Bitcoin bottom back in November and December when Bitcoin bottomed out at around $15,000. In today's clip, this is from a recent interview that Mark did. He's talking about why Bitcoin will go to $1 million, how it gets there, what he sees in the current state of the financial markets. Want to share this with you guys, get a different perspective on the markets. Make sure to leave your thoughts in the comment section below about this clip. Watch it to the end. It's a good one, a lot of useful information. Let's go ahead and see what Mark has to say here.
look, I mean, I hate to say it because I don't want to overpromise and underdeliver, but I think we're really just getting started.
Yeah.
Look, the cyclicality of digital assets is real. It's this 4-year cycle. And why do we have a 4-year cycle? Fear and greed. And it's kind of baked into or coded actually into the way Bitcoin in particular works, right? You have these block rewards, the amount of money or the amount of Bitcoin that is rewarded to miners for securing the network. Every 4 years, that number gets cut in half. Now, whoever thought of this, whoever he, she, they, Satoshi happens to be, it's absolutely mad genius. Well, why is it mad genius? Well, it creates movement. Well, why does it do that? Well, if you think about it, the miners, their core costs are basically fixed, electricity and the machines. And so if suddenly your revenues were cut in half because the block rewards get cut in half, most of them will go out of business. So what has to happen? The price has to rise. So there's a built-in movement of the price. And once the price starts to rise, people start to follow, right? That's what traders do. They look for movement.
Yep.
And then that creates more movement. And so we get this exacerbation of the trend. Now, part of the problem is it starts undervalued because the beginning of the cycle post the halving usually occurs around, a period after the crash, the previous crash.
Right.
So we have crypto winter, prices fall, prices are undervalued, anticipation of the next halving comes along, and investors start accumulating assets. Well, what's an investor? An investor is someone who buys an asset that sells below its fair value. So today, fair value, depending on the model that you look at, the model I like, which is based on Metcalfe's law, says that fair value of Bitcoin is around 55K. Okay, so at 30K, we're below that. So as an investor,
Sure.
I like to buy assets that are below fair value. Well, then what will happen is as you get out of crypto winter into crypto spring, which a year ago we went into crypto spring, as we talked about, it's choppy, it's volatile. You kind of don't end up much different. I think over the past year, we're up about 50%. Now, that's a good move, but it's not the 100% off the cyclical low, but it's a nice move. Well, now, as of this June 15th, a month ago, now we're in crypto summer. Well, what's crypto summer? Crypto summer is the year leading up to the halving. Usually has an upward bias toward that fair value. So my guess is that between now and the halving in April, we'll drift slowly and calmly up toward that fair value. And then what happens is after the investors get their fill, buying the asset below fair value, then the speculators come in. Well, what's a speculator? Speculator is just the opposite of a hedger. Well, what's a hedger? A hedger is someone that has to sell something because they're producing it, like the miners, right? They're selling their Bitcoin as they produce it to pay for electricity and machines. Well, a speculator just takes the opposite side of that. They're not good, bad, or indifferent. They're just, there's a seller, there has to be a buyer. For every seller, there's a buyer. For every buyer, there's a seller. So that pushes us up above kind of fair value. Well, then what happens is we get the parabolic crypto fall, kind of the Indian summer, the big move. And that's where the punters come in, right?
Yeah.
The really levered,
Yeah.
and they're going to push the price way above fair value. And then we'll have another crash, another crypto winter. But so I would say that's a long-winded way of saying kind of between now and the halving in April, my guess is we drift upwards towards 50K.
When
From
you look
April to the following April, that's where I think we could double or even treble into the fair value. By then will drift upwards toward that 100K, which is what I think is fair value for this halving. Now, part of the challenge is the law of large numbers, right? When we went from the first halving from 10 to 100, 10x move, okay? That was pretty easy because you're talking really tiny numbers, didn't need a lot of volume to get to $100 a coin. I mean, and then you went to 100 to 1,000, another 10x move. And that's a little harder, but still pretty easy. You go to 1,000 to 10,000, that was the last halving. That was tougher, although we went right through 10,000, right up to 20,000 before the crash. Well, this halving, I think, is 100,000 at fair value. So it's a 10x between halvings. Why 10x? There's lots of different reasons for why that works on the Metcalfe's law parabola. But let's just say we get to that 100,000 for fair value.
Mm-hmm.
It's a lot harder to go from 10,000 to 100,000 than it is from 1,000 to 10,000, right? Just need more people, more dollars.
Yep.
The market cap gets bigger. We're talking trillions, plural, as opposed to half a trillion. So I think it will be tougher to get the same kind of percentage move, but the total dollar move will be much bigger.
Yeah.
And that's where this supply demand comes in.
Exactly.
Not if, but when, and I believe when BlackRock is awarded their crown and they become the king and they get the first Bitcoin ETF, even though they don't, I won't say deserve it in the sense that they were not doing the early adoption work. They were not, the ones there believing in it, but now they are part of the inner circle and they know who to influence. I won't say anything negative, but they know who to influence to get the job done. Yeah. And so I think they'll get the first one. Now, whether anyone else gets it, I don't know. I look at the gold ETF, right? The gold ETF delayed 4 years. 4 years we waited for the gold ETF. And then they gave it to one group. GLD took off. Now, there are other gold ETFs that came along, but they're much smaller. GLD really is the axe. Cycles repeat. So we will have another bear market, right? After we run, because again, I say, it's just me, I say fair value for this halving sometime in 2024 is 100K. Okay, that's my view. Okay. I think we'll go far beyond that because greed and speculative fervor and leverage. Now, I don't think there'll be as much leverage this cycle, Paul, as there were in the last ones. Right. So could we get to 200K? Could we get to 250K? Tim Draper and I have talked about that 250 number as kind of half the value of gold. Then think about it. The next halving, which is in 2028, I will argue that's another 10-fold increase as we get broader adoption and we go up the Metcalfe's law curve. That takes us to $1 million a coin.
Hey guys, thanks for watching all the way to the end of the video. If you found any value, make sure to hit that like button and leave your thoughts in the comment section below. Do you believe with Mark? Do you think we'll see a Bitcoin price of over $100,000 in the next couple of years? And do you believe Bitcoin will reach $1 million in 2030? Leave your thoughts in the comment section below. My name is Aaron from the Bitcoin Bros. I'm out. I'll see you guys in the next one. Have a great rest of your day.